In this video, guys, we're going to look at the one common winning trait of highly successful traders and hedge fund managers. Stay tuned. Hey guys, warm welcome to you. Right, so this video, I've got a little bit of example for you, a real world example of the one common trait that we talk about loads in trading and we see lots of very highly successful traders doing. But there's one example that I saw recently, real world example, that's really worth sharing with you. So the one common thing, guys, that probably springs to your mind when you talk about the one common trait is this, is we want to run our winners and cut our losers. And it's almost said so much it gets boring, right? We hear this so often, everybody says it, and even kind of people who are just starting out are saying it as if it's the holy grail of trading. And you know what, it is, right? But let's look at it from an operational perspective now in the real world. And you know, we read books about super highly successful hedge fund managers, traders, all saying the same thing. We must try to emulate this, guys. We must make sure that it's the number one thing we are doing at all times. So I've got this example here, and what this is the UK, specifically in the US as well, they're releasing the short interest on a specific stock. Now in the UK, you get to see which fund manager is short which stock and in what sort of volume. So you can kind of say, okay, well, this hedge fund manager now has added to the short position or reduced the short position. And you can see how that changes over time. And you can also see, obviously, the chart price as well. So you can start to see how they position based on price. And this is a really good insight, especially in current conditions. Now, is this a holy grail of making money? Of course it's not, because we've got hedge fund managers who are great managers who have losing quarters, losing years. Just recently, Bridgewater, completely wrong-footed by the coronavirus sell-off, and they lost money. You know, there's no one's making money consistently all the time. Even some of the algorithmic-driven funds like Renaissance get wrong-footed now and then. So there's no holy grail. But anyway, the point is, guys, I want to run you through this because this is something we can just constantly learn from. Running the winners, cutting the losers. Yes, it's said too much. Yes, I understand we can't on about it all the time. And yes, it's not always the kind of this situation here, which we'll talk about in a moment, isn't always the same thing that we can do, but it just shows you the mindset, and it's just constantly trying to adjust and tweak it. And if you want to become the 8-figure trader, if you want to get to that next level, this has to be mastered. All right, which side shall I go? Let's go this side. Okay, so this was a stock. I'm not going to talk about what stock it is because I'm not going to try and recommend anything, but it doesn't even matter what stock it was. It doesn't even matter which manager was running this. The point is, this was a stock, and this hedge fund manager had been shorting this stock for around this level here, right? And the price level was about, I think it was like about 300p or something like that, £3, okay? So it was quite high. Now, this manager had been shorting it and he'd been kind of just holding the position in a long period of time. We're talking probably a year or two over the period, and this was the price. So he'd sat with this short, sat with this short, and now it started coming down. Now, he's starting to add to the position here, here, and even more astonishing, he is adding to the position here. Okay, and you start to think, wow, this is really what it's all about. This is the running winners really kind of cemented in one trade. You know, this is a short position this guy's got, or this hedge fund manager, and he's adding to the short, he's pressing the winner. And even when most people, let's be honest, guys, if you've been this short down here and it gone from 300 or 200 and we're now down at 10p or whatever it is, you're probably not going to press the short because you're thinking, well, how much more is there? But this is the difference. Now, I'm not saying this is the right thing to do all the time, but this is the kind of moral from this is that there was a thesis that probably the thesis was this company is going bust. Fine, that's the thesis. And so this manager isn't pressing into shorts as it's spiking and doing this as many retail traders would do. Now, I'm sure he added in bits and pieces, but the key takeaway from this, guys, is these ads here. This particularly, he's not peeling off the short and saying, oh, I'm going to take money off. He's pressing it because he's realized he's right. And he's realized that, hey, the high probability of me now being right on this is good. Any little pop off the low percentage-wise, we're not going back to here again. Any little pop off the low here percentage-wise, I can sell into, sell more short and press it to the lows. Now, he must, of course, he's fully aware of the fact that there's potentially going to be a short squeeze, but of course he's going to be aware that there might be a lifeline for debt restructuring, etc. It doesn't matter, does it? The point here, guys, is that, you know, forget anything about the whole theme of it. He's had a fundamental thesis, and that could be a technical thesis, it could be whatever, but in this case a fundamental thesis, is that the patience to sit through it. I'm sure there was a point where he would have closed it if it had gone against him, just like Bill Ackman did with his Herbalife short. You know, had a thesis, it didn't work out, he spent a lot of money on it, he lost money, he moved on to the next thing, he recovered, and more. But this manager had his thesis that the company's going bust. It took a while to play out. Then when it started to play out and he was proven right, rather than peeling off the trade, he's getting more aggressive. He's like, yes, I was right, I was early, my average is up here, now I can just add to it and press and squeeze as much juice as I can out of the trade. And so these ads down here just seem so alien to many retail traders, but then the professionals are doing this, you know, they're pressing and pressing and pressing. And so the moral of this, guys, just going back, is if you've got a thesis, whatever my thesis may be, whether you're going for catalysts or fundamentals, I know many of us are short-term traders, so this longer term doesn't generally apply. But the point is that when you're right, now pressing might well be a little bit a step too far for now, because you have got the danger, of course, if you're adding and you're adding too much, then your short entry becomes here, and a little pop and you ruin the whole thing. So, you know, that doesn't go unnoticed. But the point is, if you're right, is to hold it and run that winner. Going back to the initial thing of running the winners, this is the definition of running the winners. This is one extra level, guys. This is leveling up on that. This is adding and squeezing as much as you can out of that trade. But just running that winner until your thesis is proved correct. I'm sure there's risk management in place where he'd cover if things change. But don't forget, this is not a technical play. This is a fundamental play. This is, okay, well, if the fundamentals change, maybe the fundamentals change here and he covers it. Maybe the fundamentals change when it's back here, he covers it. So there's a difference in that. For us, it might be technical, but again, it's running that winner and cutting the loser. So I thought it was a good example, guys. I thought it was interesting because it's a real world example. It's showing you exactly how these guys are thinking, and it really kind of just cements and puts into one trade for me the whole idea of running winners. You know, up millions and millions up on the position, good percentage gain, yet still prepared to not only hold it, but actually press it for more. And that's interesting. Take care, guys. See you next one. Bye-bye.